AI ETFs explained, the smart way to invest in artificial intelligence. An AI ETF, exchange-traded fund, is a basket of stocks focused on companies driving the artificial intelligence revolution. Instead of picking individual AI stocks, you buy one ETF share that gives you instant diversification across 30-plus AI-related companies. 60% AI ETFs dollar cost averaging strategy. What to buy? Global X Robotics and AI ETF, BOTZ. Top holdings: NVIDIA, Intuitive Surgical, First Trust AIQ ETF. AIQ, balanced mix of large and mid-cap AI stocks. ARK Autonomous Tech ETF. ARKQ, more aggressive, Tesla AI startups. YDCA, invest $500 a month to avoid buying at peaks. Historically beats lump sum investing in volatile sectors. Perfect for beginners who don't want to time the market. Example: if you invest $300 a month in BOTZ, you'll own shares at both highs and lows, smoothing out risk over time. 30% blue chip AI stocks, long-term hold. Top picks for stability: NVIDIA, the picks and shovels of AI. Microsoft, MSF Key, OpenAI partner plus Azure AI. Alphabet, Google, Gemini AI, dominant ad business. Meta, AI-driven ads and metaverse. Taiwan Semiconductor, TSM, makes chips for all AI companies. Why 30%? These companies print cash from AI already, less volatile than pure startups. 10%. AI startups, high potential bets. How to invest safely. Crowdfunding, seed invest, minimum $100. Venture ETFs, ARK, holds pre-IPO AI companies. Direct startup stocks, SoundHound AI, SOUN, C3.ai. Rules for startup investing. Never invest more than you can afford to lose. Expect 90% of startups to fail. Look for revenue, not just hype. Why this mix works. ETFs, 60% equals low maintenance growth. Blue chips, 30% equals steady compounders. Startups, 10% equals lottery tickets that could 10 times your investment. Pro tip: rebalance once a year to maintain your 60-30-10 split. Which part of this AI portfolio appeals most to you? ETFs, blue chips, or startups? Comment below.